In 2023, Larry Ellison announced that Oracle would spend $400 billion building AI data centers for a company that might not exist by 2027. And that company is OpenAI, which is currently losing $60 million every single day. To make it all worse, Oracle is $100 billion in debt to build these data centers and has no plan B if OpenAI can't pay. So how does one of the most powerful software companies in the world end up here? To understand that, you need to go back to 1977 when Larry Ellison read something that nobody else thought was worth acting on. It was a 1970 IBM research paper describing a new kind of database technology that could store, search, and retrieve data faster and more reliably than anything that existed. IBM had invented the technology but decided it wasn't worth building, and Ellison thought that they were making a huge mistake. So he and two co-founders started a company in Santa Clara and named it Oracle after a CIA database project that Ellison had worked on as a contractor. And of course, their first major customers were the CIA and the US Navy. But then corporations started lining up and Oracle grew faster than almost any software company before it. And Ellison was ruthless about winning. Sysbakes, Informix, and IBM's own database division all tried to compete, and Oracle outlasted every single one of them. By the 1990s, Oracle was the database the world ran on. And they didn't just sell databases, they sold an entire ecosystem of tools, applications, consulting services, and certification programs. And switching away from Oracle meant years of migration work and millions in cost, and most companies never even tried it before. This is kind of similar to Salesforce. I made an entire video about it and I recommend you check it out. By 2000, Oracle had $10 billion in revenue and Larry Ellison had briefly become the richest person on earth, surpassing Bill Gates. But technology doesn't stand still, and something was coming that would threaten everything that Oracle had built. In 2006, Amazon launched Amazon Web Services. The idea was simple but devastating for Oracle. Instead of buying expensive software and running it on your own servers, you could run computing power by the hour over the internet. And suddenly the on-premise database model that Oracle had built its entire empire on looked obsolete overnight. And Ellison's response was to mock this whole thing publicly. At Oracle Open World in 2008, he stood on stage and said that cloud is just someone else's computer, and he called the whole thing nonsense and it was just a marketing gimmick. While he was saying that, Amazon, Microsoft, and Google were quietly signing up enterprise customers at an extraordinary rate. AWS alone grew from $1.5 billion in revenue in 2010 to $17.5 billion by 2016. And by 2012, Oracle's stock had stalled. Enterprise customers were asking whether they needed Oracle's expensive databases when cheaper cloud alternatives existed. And revenue growth slowed as well, and Wall Street started questioning whether Oracle was a business in decline. And Ellison did what any survivor does, he adapted. Oracle started building its own cloud infrastructure and launched Oracle Cloud in 2016 to compete directly with AWS. Granted, that was slower, smaller than Amazon, Microsoft, and Google, but it worked well enough for the customers already locked into Oracle's system. By 2023, Oracle's stock had risen over 300% from its 2012 lows, one of the greatest comebacks in enterprise software history. But the near-death experience had taught Ellison something he would never forget, that missing a platform shift is existential. He had nearly lost Oracle by dismissing cloud computing for too long, and he was not going to make the same mistake with AI. So when ChatGPT launched in November 2022, Ellison moved faster than anyone in enterprise software. I mean, his thinking was straightforward. AI would require more computing power than anything ever built before, and every major AI company would need infrastructure they could trust, which meant not renting from a direct competitor. You see, Microsoft was building Copilot, Google was building Gemini, and Amazon was building its own AI models as well. And none of them would want to train their AI on a competitor's cloud. And Oracle had no AI products competing with anyone. That made them uniquely positioned. And in January 2025, President Trump stood in the White House alongside Ellison, Sam Altman, and SoftBank's Masayoshi Son and announced Stargate, a joint venture to build AI infrastructure across the United States. Over $500 billion committed over 4 years. and Oracle would be the primary infrastructure builder, and their stock surged. And Ellison started making some of the boldest public statements of his career. At Cloud World, he told the audience that AI would soon put cameras on every street corner and in every home to monitor people around the clock. He also said that AI would cure cancer and end aging, and he predicted that artificial general intelligence, AI that can think and reason like a human, was just 2 years away. And that prediction has already expired without it arriving. But Ellison wasn't done betting. xAI, Elon Musk's AI company, signed a $10 billion deal with Oracle, and other AI companies followed as well. Oracle Cloud's annual revenue started growing 50% annually, and the stock hit an all-time high of $198 in February 2025. And the neutral AI infrastructure strategy looked like genius. But underneath the impressive numbers was a problem Oracle was in advertising. You see, the vast majority of Oracle's AI revenue was coming from one single customer, and Oracle wasn't just building for them. They were financing them, letting that customer defer payments by a full year while Oracle kept borrowing money to build even more. And that company was in far more trouble than anyone at Oracle was admitting. You see, OpenAI represents somewhere between 35 and 40% of Oracle's total cloud revenue. For context, the US government requires companies to disclose when any single customer represents more than 10% of their revenue as a warning sign. And Oracle is now more than 3 times that threshold, with one customer that has never turned a profit. But the concentration risk is only part of the problem. You see, Oracle isn't just building infrastructure for OpenAI, they're also financing them. Under the payment terms of their agreement, Oracle builds the infrastructure, delivers the service, and then waits a full year before OpenAI has to pay. That means Oracle is carrying somewhere between $15 and $20 billion of OpenAI's unpaid bills on its own balance sheet at any given time, while simultaneously borrowing more to keep building. So Oracle has essentially become OpenAI's bank, and the company Oracle is banking on is currently losing $60 million every single day. In 2025, OpenAI spent $34 billion to make $13 billion, and HSBC analysts warned that they could run out of money by mid-2027. The $60 billion per year Oracle expects OpenAI to pay starting in 2027 comes due at almost exactly the moment analysts say OpenAI might not have the money to pay for it. And OpenAI isn't Oracle's only concerning AI customer. xAI, Elon Musk's AI company, has a $10 billion deal with Oracle and is also burning cash with no clear path to profitability. Oracle's AI growth story depends on both OpenAI and xAI, two of the most cash-burning companies in the history of technology, simultaneously become profitable enough to pay their bills. And Oracle has no plan B if they can't. Oracle's own executives have never publicly addressed the concentration risk, and there's no disclosed contingency plan. And the payment structure means that Oracle won't find out OpenAI can't pay until Oracle has already built everything. And Oracle is still building faster than ever and on land that might not have enough power to support what they're putting on it. In West Texas, Oracle is building one of the largest data centers ever constructed. A 1.2 gigawatt facility in Abilene that would consume more electricity than a city the size of Nashville. But construction has hit a problem nobody anticipated at this scale. There simply isn't enough power. The local grid that manages electricity for most of Texas has issued warnings about capacity constraints. And Oracle needs power that the infrastructure simply cannot provide fast enough. And Abilene isn't the only project facing this. Oracle has data center commitments across Texas, Illinois, Tennessee, and Georgia, all racing to be built simultaneously. And the pace of construction has outrun the pace at which power infrastructure can be upgraded. And Oracle is committing to capacity it cannot physically deliver on the timeline it has promised. Then in January 2026, something happened that shook the entire AI infrastructure sector. DeepSeek, a Chinese AI lab, released a model that matched the performance of most advanced American AI system at a cost of approximately $5.6 million. For some context, models like GPT-4 and Claude cost hundreds of millions of dollars to train. So if frontier AI can be built for $5.6 million, the entire premise that AI would require insatiable amounts of expensive compute starts to look very different. The assumption Oracle bet $400 billion on was suddenly being challenged. This has happened before. In the late 1990s, the entire telecom industry bet that internet traffic would grow exponentially forever. Companies borrowed billions to lay fiber optic cables across ocean floors and continents. Global Crossing took on $12.4 billion in debt, and WorldCom took on $41 billion. And both went bankrupt in 2002 when demand didn't grow as fast as they projected. And the fiber they built sat unused for years on ocean floors. And Oracle has borrowed $98.6 billion, betting AI demand will be insatiable. The question is whether AI follows the same pattern as fiber optics. And the finances are definitely not looking good. Oracle has $98.6 billion in long-term debt against annual free cash flow of $11.8 billion. That means it would take Oracle more than 8 years of their entire free cash flow just to pay off the debt, assuming they spend every single dollar on debt repayment and nothing else. And the annual interest alone on this debt is $3.4 billion, nearly 30% of their free cash flow, going just to service the debt before they build a single server. And the AI revenue Oracle keeps citing to reassure investors needs some context as well. Oracle regularly tells investors it has $400 billion in AI infrastructure commitments, but what they mention less prominently is that the firm contracted backlog, the amount that is actually legally binding, is approximately $130 billion. The remaining $270 billion is pipeline commitments, letters of intent, and announced plans that haven't been signed into enforceable contracts yet. And Oracle's AI growth story depends on converting those non-binding commitments into real contracts. And if AI demand softens in the next couple of years, those conversions don't happen. Moody's, one of the world's most respected credit rating agencies, has placed Oracle on a negative outlook. Think of it like a warning before a warning. Moody's hasn't cut Oracle's credit rating yet, but they've publicly flagged that a cut could be coming. And if it does, Oracle becomes more expensive to lend to, meaning the billions they still need to borrow to keep building would cost them significantly more. And then there's Larry Ellison himself. He personally owns 42.5% of Oracle's shares. At the stock's peak, that stake was worth approximately $170 billion. The stock now trades around $160, down from its peak of $198. And every dollar Oracle stock falls costs Ellison approximately $400 million personally. And his personal fortune is not just invested in Oracle, it is Oracle. He has every financial incentive to keep the AI growth story alive, regardless of the underlying risk. So what actually happens next? I think there are 3 realistic outcomes from here. In the best case, OpenAI completes its IPO successfully, raises enough capital to cover its obligations, and starts generating the revenue needed to pay Oracle $60 billion a year from 2027. And Oracle's infrastructure bet pays off, and Ellison is proven right, and their stock recovers. But that requires OpenAI's IPO to succeed at a $1 trillion valuation, while the company is still losing $60 million every single day. In the second scenario, OpenAI gets acquired. I think Microsoft is the most likely buyer given their existing $13 billion investment. But a Microsoft acquisition creates an immediate problem for Oracle. Microsoft would have every incentive to move OpenAI's workloads from Oracle's infrastructure to Azure, their own cloud. And Oracle loses its biggest customer, the $60 billion in annual payments never materialize. And Oracle is left with $98.6 billion in debt and infrastructure built for a customer that no longer needs it. And in the ultimate worst case, OpenAI runs out of money before a successful IPO or acquisition, and the payments never start, and Oracle's AI growth story collapses, the $270 billion in non-binding pipeline commitments don't convert, and OpenAI isn't the only customer at risk. xAI, Oracle's second largest AI customer, is also burning cash with no clear path to profitability. So if both customers can pay the bill simultaneously, the picture gets significantly darker. So what do you think? Do you think Oracle's AI bet pays off, or does it become the next great tech overbuild story? Let me know in the comments below. Subscribe, and I'll see you in the next one.